enjoy that part because it's just so good to see each other, and so many people run into each other that they haven't seen for a while. And one of the big reasons we do this is to see each other, of course, which is we get to do every month and have done for 27 years now, bar Januaries. Just before I get into thanking sponsors and welcoming our speakers and things, one of the, you might have seen an email out there. I'm just interested in, I'm interested in people's views about what we should do with the Leading Edge series in the evening. So people aren't hanging around on a Thursday evening as we used to, because we used to have this thing called Friday, which apparently we now spend Friday at home as a population. And there's some amazing videos of Sydney streets between showing Thursday and Fridays are pretty empty. So we've seen it in a declining attendance at the Leading Edge series. But it's a red hot series. Everyone loves the companies. It's a great opportunity to showcase. Look, showcasing big successful companies like Whitehaven and stuff's easy, but we've always put a lot of energy into helping the smaller aspirants and the up and coming, the people who in the end, BHP was once 5 guys and a bright idea. In fact, they had a lump of rock. They thought it was tin. So yeah, they didn't. They took this really dense rock and they went and got it assayed, and guess what? It was silver. So everyone starts somewhere, and we put a lot of support into the junior companies. What we're thinking is that we might, because it's a theatre style, we don't put on a meal at Leading Edge, because the idea is we don't charge the speakers that much, and so would anyone who's a broker, I mean, I'm looking at Tony Bonello just for a start, but there are many others in the room. Anybody who's a broker or has a view, or you're all members, in fact, you're all life members. So what are we going to do with the Leading Edge series? Have a conversation, let us know. So what we're thinking is if we kicked off somewhere sort of a little bit more perhaps down market than this. We love Mayor Vale, but we could, Leading Edge series should be maybe a slightly more pub end of life. Do the prezos, maybe grab a beer on your way in, and then go and have your own lunch afterwards, start midday, go for an hour, something like that. Does that sound better than a Thursday evening? Well, why don't we do this? Just for a first card, who would like it to stay on a Thursday evening, just notionally, not holding you to it? A Thursday evening, we'll do those first, and then afterwards we'll do who would like to do a lunchtime event, and we'll just get some straw polling, okay? All right, so first of all we'll do who would like to do keep it as it is, Thursday evening. Okay, that's what, how many hands is that? About a dozen, right? Does that that looks like a dozen from up here. Okay, so something in the middle of the day without saying what the format is, but there's something where you could still get away from the office. You don't have to have a beer. You can go and see 3 presentations, go back to work with a straight face, or you can kick on with your mates and, so something in the middle of the day. Who would favour something more in the middle of the day on a Thursday? All right, okay, there you go. That was really helpful, thanks. So I've got about 3 times the amount of support for 3 or 4 times for the lunch event. We'll go ahead and do some homework on that. I think then if we need to finesse that, that was actually really useful. Yeah, and you own the club, so I just work here. If you have, if you really want to see it go in a certain direction, particularly, or there's a venue, or and the big thing with the junior companies, we don't serve you this sumptuous meal. We just give you a nice, maybe you can just grab a beer on your way in to sit down, and that'll give us good direction for the coming year. Welcome to Roger Baxter and Linden Sproule, our speakers. And also, I just want to do my usual thing, which is to sincerely thank our sponsors, which I'm going to do from your left, which is the Taurus, CRE Insurance, Kingsgate, the Thailand Mining Company, Fender Geophysics, thank you Andrew Sloot, Inversia, RFC Ambrian, Tees, Ioneer, our major sponsors, BDA and AME Group, always been with us for a long time, and I didn't take a photograph of the other one, but Broken Hill Mine, Sodola's Research and Service, AMEX, IMARC, got the team from IMARC here, and don't forget we've got IMARC is on in 2 weeks' time. There's like hundreds of investors from around the world, a lot of mining companies on stage, you've got to be there. APN, Mining, and the brokers, well, our friends Veritas. So just put your hands together and thank those folks because they make the Sydney Mining Club go round. An unusual visitor amongst us is Flynn Melnick here, who's gone to all the trouble of pulling out his best T-shirt to appear today. Since Flynn used to chair up here occasionally, he's been the ventilation officer at Moranbah North. It's been a massive job. He's had to watch the mine next door. The Grosvenor mine burned down, the sister mine. They're just reopening it at the moment. And on his watch, as ventilation officer, he's also had an explosion in Moranbah North about 4 or 5 months ago. 6 months ago, wow, and they've been trying to restart it since. Really precarious job, and but you know, looking further around, the coalfields up there, Saraji's closed. BHP is now paying, what did they say? They're paying 9 times more in royalty than in profit. What's wrong with that? People they're trapped in there. You know, they crank the royalty rate up. You know, people have already invested their money, and then it's just robbery. And the Liberal Christofouli says he's not going to alter the plan. Susan McDonald's having a crack at it, but it's just an outrage. It's an obscene amount. Queensland dropped on the, I don't know if you guys read the Fraser Institute figures, but in 1 year, there's 2 columns. There's 80 jurisdictions in 2 columns in the investment attractiveness. Queensland managed in 1 year to drop 30 spots out of 80. So it went from middle of this column to the middle of the next column. Every Australian jurisdiction took a hit, and now our friend Shane Jones in New Zealand is now ranked for investment attractiveness more attractive than every state in Australia, every state or territory. So there is no doubt that this is a strongly anti-mining set of governments, and we look forward to some change in that royalty scheme up there, and we wish Flynn and his team a lot of luck in getting that mine restarted, because it's been quite a drag, and there's problems, and they just can't seem to get the reaction in the Gulf area of the mine to settle down long enough so that they can kick the longwall off and move again. Plenty good coal up ahead, but it just shows you how precarious. What do you produce? What, $1.5 billion in coal a year, around about that? Does that sound about right? So this business has just lost $750 million just sitting there with this technical problem, which is they're trying to get free of. So exciting times up in Queensland, particularly if you're an AFL player. How good was that? And we got the grand final as Queensland's in that as well. The boys must be pretty happy about that. All right, listen, back to business. I'd like to kick off the running here. We're going to go as it's shown on the board. There was no coin toss required. Linden would like to go first, and tell us the Polymetals story. Ladies and gentlemen, please welcome to the stage Linden Sproule. Thank you. All good? All right, mate. Good luck, Julian.
Good afternoon, all. Thank you for being here today. Thanks, Julian and the Sydney Mining Club for the invitation. It's a pretty good time to be in silver. Silver's at almost all-time highs. Our stock price is at almost all-time highs. But I would remind you all, our job as a mining business is to make margin on the metals we produce in whatever metal price condition. That's certainly how we look at our business at Polymetals. So I'll play a short video first and then walk you through the Polymetals story and our Endeavour silver zinc mine in Cobar, Central West, New South Wales.
Polymetals is making the Endeavour mine great again. The zinc silver lead mine, just outside the established mining town of Cobar in central New South Wales, was acquired by Polymetals in August 2024, and following a focused redevelopment program, mining resumed in May 2025. The Endeavour mine was discovered in 1974 and operated for 38 years until 2020, processing over 32 million tonnes of silver, zinc and lead ore. More than $150 million in mining infrastructure is in place, including the underground mine and headframe, processing plant, grid power, water and transport. Polymetals negotiated a significant reduction from a 100% silver royalty to a 4% net smelter return on silver, zinc and lead, making the restart possible. With silver prices at 12-year highs and robust demand for all things metal as the world electrifies, removing this financial constraint has paved the way for long-term value creation. The restart marks the beginning of a broader strategy to restore Endeavour as a major producer. New exploration programs have strong potential to extend mine life and enhance mill utilisation. The company is committed to $7.5 million per annum exploration investment. Polymetals controls a 70-kilometre strike corridor north of the Endeavour mine. Our exploration acreage covers 1,107 square kilometres within the prolific Cobar Basin. The company has developed a large-scale exploration model with multiple targets, offering the potential to define and monetize smaller satellite deposits. Thanks to a dedicated team and the valued support of partners and shareholders, Polymetals is on track to become a long-term, profitable producer of base and precious metals.
So today I'm going to share with you a story of Polymetals, bringing back the historic Endeavour, or Allura mine as it was called back in the day. We first started working on this project in 2022. We finalised the acquisition of this project in 2024. And within the last 12 months, we've redeveloped this project and we're now producing silver, lead and zinc. Polymetals itself, we're an East Coast domiciled mining company. We've had 30 years of experience in the basin. My father, our chairman, set up the business. His first exposure to this asset was in the late 1980s when the business of Endeavour mined a high-grade silver-rich supergene zone. He purchased those tailings, which still ran 550 grams per tonne silver, 9 grams gold, set up a processing plant down the road, about 100 k's at the Mount Bobby gold mine, and extracted silver and gold from those tailings. So we've known about this asset for many years. We actually tried to buy the asset in 2014. I was born in Cobar. We've been kicking around the Cobar Basin for many years. Polymetals' DNA is in development, lean, efficient operations. We operated privately for many years across a range of base and precious metal projects, mainly focused in Australia. For those that don't know the Cobar Basin, it is a high-grade polymetallic district. There's copper, gold, silver, lead, zinc ore bodies. These ore bodies are fairly distinct. They're quite deep. They're quite large, and they're high-grade deposits. So These deposits in Cobar are distinct as opposed to other areas within Australia, but they are true polymetallic deposits. We get a range of mineralisation throughout all of the various deposits. But Endeavour itself, it's one of the 3 large mines in the basin. It was discovered in 1974 by electrolytic zinc, which morphed into Pasmenco. Pasmenco commissioned the project in 1982, and it ran continuously for 40 years before being placed on care and maintenance in 2020. And the reason it was placed on care and maintenance is because of a historic silver royalty. In 2005, the vendor, CBH, had to raise money very quickly. So what they did is they sold forward 100% of the silver in exchange for an amount of money at that time. That forced the miners to thereafter, for the last 15 years of operations, to focus solely on higher grade zinc and lead within the deposit and abandon all silver areas. So prior to us acquiring this project in August of last year, we renegotiated that royalty to a 4% NSR over lead, zinc and silver. The net effect of that is basically bringing back 30 or 40% of previously lost revenues. That's the major differentiator here. We're not doing anything majorly different. We're producing zinc and silver lead concentrates, but it's that reset of the economics which has given more life to this project when it was staring down the barrel of being rehabilitated, which would have been a travesty. So it's been a busy couple of years for us. It's certainly been a busy last 12 months. We acquired the project formally in August of last year. We secured our finance the month later. The month following that, we secured our mining fleet and went about redeveloping the project in true Polymetals style, which is doing our own internal engineering, managing our whole project, owner-operator, owner-built. So we have a great handle on costs, being able to do things innovatively and cheaply, and also understanding the asset from start to finish and also moving into production. We commissioned the project in May. We had first production through the mill on the 6th of June. We're slowly ramping up and hopefully we should be in steady state production, which is about 60,000 tonnes per month in November. So we're really looking forward to that. The asset itself, it's a very large asset. It was built by Fluor Daniel back in the 80s. It was built for a cost of around $150 million back in those days. It's serviced by road, water, power, rail line. It's a 1.2 million tonne per annum plant. It's got a head frame, it's got a twin decline. It's got everything there. It also comes with a very large real estate portfolio in the township of Cobar. Resources, what we know about this deposit today is that it's a 50 million tonne resource. Initially it was discovered on a 28 million tonne resource. They mined 32 million tonnes, producing more than 92 million ounces of silver and 2.6 million tonnes of zinc. We still have 16.3 million tonnes of resources at Endeavour, and we've got no doubt that we'll continue extending this deposit deeper and to the north-south. We're exploring at the moment for additional ore zones as southern extensions, but we also have open mineralisation in the main ore body itself at depth and to the north. Last year in August we wrapped together a 10-year mine plan. With 6 of that is hard rock in the underground mine. We have 3 different areas in the mine. You can see the pink area at the top there. That's a very high-grade silver area. In fact, it was the sister lode to the south, which the chairman, Dave Sproule, my father, bought that supergene tailing from. Where there's about 800,000 tonnes of very high-grade, nominally 400 or 500 grams per tonne silver plus lead and zinc in that area, which we're blending into our main feed, which is coming from the main ore body itself. You can see those green areas. A lot of these are primary stopes that were left behind, mainly because they were smaller. when you have the luxury of a very large deposit, our predecessors were really chasing very large stopes. Also, a number of those green stopes are much higher grade silver and lesser lead and zinc. And you remember from that royalty, it was no good for them to go chase silver. Down the bottom there, there's a virgin ore body. It's open to the north-south and at depth. It was known about in the early years, but it was only drilled out in its extent in 2016. It's developed down to before the mine was placed on care and maintenance. So for the first 2 years, we've front-loaded the mine plan with silver. That was very deliberate. That's coming from the main ore body itself and that high-grade silver area. We're looking to produce over 5 million ounces over the next 2 years of silver, along with our fairly good zinc and lead credits. What we're really excited about is the upper north lode, the pink area on the image before, this high-grade silver area. What we know is that the original supergene that was mined in the sister south lode, Pasminco mined 100,000 tonnes, grading 5,000 grams silver, 9 grams gold, plus a bit of lead and zinc. In today's metal price environment, that's worth 1.3 billion Australian dollars in 100,000 tonnes of material. We have the sister lode to the north. We've got 800,000 tonnes of resources there. In our mine plan, we actually modelled a cut and fill mining method. There are challenging conditions up there in the oxide zone. What we've worked out through geotechnical drilling and also access to that area, which we have now, is we'll be able to stope this area. That'll give us probably twice the amount of tonnes we put in our mine plan, which will be really good. You can see some of those drill intercepts there. What we do have in this area is a component of native silver that sits on top of the deposit. Anyone that knows anything about the history of Allura will understand that there is quite a bit of native silver. We're unable to quantify how much, but we're looking forward to getting into that area as a bit of upside. We now have access to this high-grade area. You can see it's pretty shitty ground, to be honest. We've had to do a lot of ground support. We've put in arches. We've put in 100 mil of shotcrete. It's taken a little bit longer to get in this area, but we now have permanent, safe, long-term access to extract the high-grade silver ore to feed into our main ore body base feed over the next 2 years. You can see there on the right, that's the first face that was opened up in development ore on the 11th of September. We'll start seeing this material flow through the mill during the month. We're very excited about this. It'll basically double our silver grade that we're nominally milling at the moment. Where we're at, we're producing zinc and silver lead concentrates. We've produced to date, since commissioning the project in June, we've produced about 20,000 tonnes of concentrate. At the front there you can see zinc concentrate, on the back there's silver lead. Our first shipment is going out at the moment. We've got the first vessel, 11,000 wet metric tonne shipment of zinc to head out mid this month in the next couple of weeks. That's exciting. It's the last piece to the puzzle to demonstrate that we've been able to bring this project online for a reasonable amount of money. We've been able to produce from this deposit. We're getting really good metallurgical recoveries. We're producing very high quality, marketable concentrates, and we can get the product to market now. So the first shipment is going to Onsan, Korea with our partners Korea Zinc. So we're looking forward to that over the next couple of weeks. Where we're at, we're still ramping up. Keep in mind, you don't turn on a base metal mine and hit full production the next month. We've done pretty well so far. We're breaking even on an operating cost basis. That happened in our first full month of production. We're very happy about that, and we should see steady state, as I mentioned, in November, and that free cash flow inflection point thereon. And as we blend in that high-grade silver, more metal units through the mill for the revenue. So far, we've been utilising prepayment for our concentrates to manage our working capital. Up to end of August, we received almost $30 million. We're doing prepayments on a monthly basis at the moment. We've got enough cash in the bank and we're paying down our debt. We only settled with $10 million to bring this project back online. We've paid back 25% of that already, and we should extinguish that by the end of the year as we start seeing increased cash flow through that high-grade silver and reaching steady state. Our story doesn't stop with Endeavour. In parallel, we are focused on exploration. There really hasn't been a focus on exploration throughout this area over the last 20 years, really from the later years of Pasminco, and certainly the vendors of the project, our predecessors, who ended up being owned by a Japanese smelting company, were focused on production of concentrates to get them to their smelters in Japan. So we're really excited. It's fairly simple for us. We're working on near mine and in mine exploration as well as regional stuff. We need to fill the mill. We're only running at about 60-70% of our nameplate capacity. So if we can bring in additional ore proximal to the main ore body itself, we should be able to increase our production to nameplate, which makes a material difference to the business. And that's, for us, we're a small company. There's 3 of us in head office. We see the best value for our business as a single asset at this stage and really extracting as much value as we can out of this asset. Now, in mine and near mine exploration, we're currently drilling there at the car park prospect in the yellow ellipse there. We're targeting a southern extension to the ore body. This area wasn't followed up historically. There was a fault postulated to displace the ore body to the south. No one's ever seen that fault in any drilling at all. And through our work, we believe we've debunked that theory because we have intersected significant and ore-grade mineralisation to the south. As well, as I mentioned, the deep zinc lode is open to the north, south and at depth. In the next couple of months, we'll start our extension drilling to understand how big this deposit is down the bottom there. We don't yet know, but given the project started with 28 million tonnes, moved to 50 million tonnes, we're quite confident that will continue to grow the resources within the mine itself as well. Regionally, again, very excited about the regional exploration. We've got a very large tenement area. There's been 50 years of explorers come through this area, from Getty Oil to Delta Gold, Newmont. There's a number of targets that we're following up at the moment. We've got first boots on the ground about 2 weeks ago with our exploration team. That's the first active exploration on the regional tenements in the last 20 years. We're following up 1 gram gold in soil anomalies that were defined in the 80s. Now a gram of gold's worth $160, $170. So we're quite excited. We should be validating those. We're doing a number of soil samples, we're doing IP surveys, and we're getting ready to start drilling some of these targets by the end of the year. No doubt, we're confident that we will have a discovery at some point. How I try and describe it is, if these tenements in the Cobar Basin were in WA, it would be absolutely Swiss cheese with drill holes. The Cobar Basin completely, not only our ground, but everyone in the district, it is significantly underexplored, and that's an opportunity for us. And also, now that the majority of these assets are back in Australian-owned companies, where previously they were in bigger international majors. To close, the Endeavour ore body is a great ore body. It's in a great district with great bones. We've brought the project back online. We're now working on optimising these assets. Like I said, we're only running at 60-70% nameplate. We're looking forward to the point where we can move up to full capacity once we discover some more material. And then we're continuing our exploration. As I mentioned, we see our best growth potential from our exploration portfolio. So for us in the near term, we're looking free cash flow generation from the silver. We've got a robust zinc engine that powers this as well. And we're building a long-term, long-life project. So if you're looking for exposure to silver and zinc, backed by a management team that does deliver with significant skin in the game, keep Polymetals in mind. Thank you very much.
We might do some questions afterwards. We'll get you back up. Yes. Great story, and not lost on the market. Market cap today, 328 million. Just 1 month ago, share price was 84 cents, and now today it's $1.23. So silver's driving a lot of stocks at the moment, a lot of heat in the silver sector. Now, let's change continents and metals. Palladium, South Africa, I believe, is it? It's got to be. The piece of geology in the world that has the most precious metals, platinum group metals, I should say. Please make welcome Roger Baxter to give us the Southern Palladium story. Please put your hands together.
Well, ladies and gentlemen, great to be here. And Julian, thanks for the invitation. Great to see so many happy shareholders in the room, shareholders in Southern Palladium. We're not a palladium company, we're a platinum group metals company, listed on the ASX and on the JSE, and just recently had our market cap go through $100 million. So interesting times, and we're shifting from being a exploration company to being a real development company right at the moment. So let's just get the technology to work. Okay, if we can. There's the usual disclaimer, which we need to put in place. And let me just jump straight into it. I think if we all just look at this year so far, the best performing precious metals in the world are not gold, and it's not silver, interestingly enough. It's platinum, it's ruthenium, and with some pretty good upticks in both rhodium and palladium prices. So if you look at the PGM suite, quite nice improvements that have taken place so far this year. After a number of years being in the doldrums, great to see the PGM suite back. 8 different countries have listed PGMs as critical minerals, including the US, China, the EU, the UK, Australia, to mention but a few. And even in the last couple of days, you've had the US coming out and indicating that rhodium is one of their most critical minerals, in that they just are totally reliant on foreign sources to get the product. Why are these minerals so critical? Well, they are the best known catalysts known to humankind. They are the best known catalysts, and they are catalysts that are stable at low temperatures, they're stable at very high temperatures. They've got a huge number of different uses. At the moment, 8 million ounces of PGMs, more than 8 million ounces, go into catalytic converters. So let me just use the example of Australia. 99% of the vehicles in Australia are ICE, that's internal combustion engine, or hybrid, 1% electric. It's just interesting to note that Australia has some of the cleanest cities in the world. And if you look at the reason why, it's technology and these wonderful metals called platinum group metals that not only act as catalytic converters in ICE and hybrid vehicles, but also even provide particulate soot filters for the diesel vehicles and the diesel fleets. So one of the reasons why Australia's cities are pretty clean or globally ranked is thanks to these wonderful metals called PGMs. They were used in industrial uses, they're used in medical uses. We've seen very strong demand in investment and jewelry taking place over the last couple of years, and they're very much part of not only the cleaning energy today at a global level, but also in the future will play a critical role as greening metals for the hydrogen economy as we go forward. And lots of interesting things happening in that space at the same time. Now, just let me give you one classical example. If you look at on the medical side, anyone in this room who has a pacemaker, maybe it's from watching the share prices on the ASX, anyone got a pacemaker in? Well, there's 600,000 pacemakers that are installed in humans on an annual basis. Every single one of them has got platinum in it. So platinum is also playing a critical role at a medical level, just to highlight some of the points. And I did mention a bit earlier that you've seen platinum up over 70%, 75% in fact. You've seen ruthenium up by nearly double. And effectively, if you look at ruthenium, ruthenium is used in hard disk storage devices. And with the significant growth in artificial intelligence, you've seen data storage requirements going through the roof. And so ruthenium prices have effectively doubled. One of my colleagues was chatting to us earlier and saying he just wish he could, get hold of a bit of physical ruthenium. It'd be nice to be in that particular market. Why are platinum group metals performing so well? Well, the reality is that PGMs had not performed for some time, probably for 7 or 8 years. We've seen over the last few years shortages of supply, so in other words, no new mine supply coming on stream, scrap recovery battling to recover from where it was pre-COVID, and we've seen continuing strong demand for vehicles, for catalytic converters, for industrial applications, for investment demand, for jewelry. And so it's been really interesting to see in a market like platinum specifically, where you've got these structural deficits in place. So the deficits are not likely to be filled even with higher prices, because the incentive pricing for bringing on brand new production and the long lead times have meant that we're not going to get the same supply response. And you've got some older generation mine supply in South Africa, which will be switching off over the next 5-10 years. So structural deficits in platinum, and you can see very nicely responding. Those fundamentals coming through nicely in price, and the same can be said, no above-ground stocks in rhodium, no above-ground stocks in ruthenium, so again, looking pretty interesting. Just jumping into looking at investment demand and jewelry demand, it's been really interesting to see some countries. In China, for example, we've seen quite a big increase in jewelry demand this year. Jewelry not for the purposes of adornment, but mostly actually for investment purposes. People are buying platinum jewelry because it's a cheaper entry point than gold, and because the price performance has been pretty good, and because there is a good second-hand market for the PGM space, PGMs have picked up quite nicely in a place like China. China now becoming the world's biggest consumer of PGMs at a global level. So that's a bit about the metals. These are exciting metals to be in. They're not short-term, they're long-term. They have a critical role to play going forward. And it's been interesting, although we don't necessarily have the time today to talk about the next steps at a global level. But PGMs will play a critical role in the energy transition and in terms of the industrial and other applications right now. So let me jump into the corporate structure of Southern Palladium. We're the listed entity on the JSE and the ASX as indicated. We've got 107 million shares on issue, so it's a pretty narrow share issuance base. We've got our top 20 shareholders own over 70% of the stock, and again, some of those shareholders in the room, and they've got smiles on their faces, which is always good to see. It's not, when the share price does go down, it's not always good to be saying hello to them. But just to quickly structure the issues here, Southern Palladium has a 70% equity stake in the underlying asset called Miracle Upon Miracle Investments. To tell you a little bit of a story about that is something that we'll do over a beer after this particular meeting. Our community partners, the Bengwenyama community, have a 30% equity stake in the project through their special purpose vehicle called Neuronox Investments. And as you can see, we're sitting at a market cap of between 110 and 120 million Australian dollars. We are now transitioning from an exploration company into a development company, and we're looking at making all the right appointments soon on both project manager, mine manager related areas. So that's how close we are in it. Just to quickly highlight here also that directors and management have a good stake in the company and very committed to playing a role in bringing it to fruition. We're located in prime PGM mining real estate. South Africa has 86% of the world's known platinum group metals reserves. And if you want to be in platinum and PGMs more broadly, South Africa is definitely the place to be. Our project is on the far eastern limb of the Bushveld complex. It sits between, to the north of us, Modikwa, which is an Valterra ARM Platinum JV, and to the south of us, which is Two Rivers, which is a Impala ARM joint venture. Just gives you an illustration of a number of the companies that are operating in the area. And we are about 350 kilometers northeast of Johannesburg, if you're looking at quite close to the Kruger National Park, for those of you that have visited. We have a well-established process in place of mining that takes place on the eastern limb. A number of different players that are operating there, shipping the concentrate across to the western limb of the Bushveld complex, where the smelting and refining is done. So we do all the concentration on the eastern limb, and we ship across the concentrate across to the western limb. Well-established practice. We've been engaging with the four majors already on concentrate offtake arrangements, either toll refining or concentrate agreements, and that's going well, and we're continuing those discussions. What's important about this is that a number of our competitors at a global level don't have the smelting and refining capacity in play. A number of our competitors, whether they're in Latin America or in Australia, have challenges in relation to their met. We don't have those met-related challenges. We produce a stock standard, high-grade UG2 ore that we'll concentrate and ship across to the Western Limb. Just to highlight in our area, and when I talked about prime PGM mining real estate, it's not just the country and the resource, it's also the fact that we're located in a highly industrialized area. There's mining supply parks close by, 2 Eskom substations, a big dam, the De Hoop Dam. There are serviced and well-maintained tarred roads and service infrastructure. And we've managed to put together a 40 million ounce resource, inferred indicated 6 million ounce reserve, based on the work we've done so far since the listing of the company back in June 2022. Our drilling has been extremely successful, and our conversion rates have been excellent from inferred to indicated, and I'll get into a bit more of that detail in a moment. But just to highlight, a number of the different plant and activity that are around us, just a couple of pictures. Who wants to see pictures of roads? But it's nice to see there's tarred, well-maintained tarred roads, the De Hoop Dam, water infrastructure close by. We've got smelters and smelting plant close to us, which are ferroalloy smelters, 2 big ferroalloy smelters. We've got a number of different capabilities from a power perspective. Mine rescue services are located in the area, mining supplier parks, et cetera, et cetera. So it's a well-established mining area. It's not virgin bush, as it were. So with 30 kilometers of drilling, 30,000 meters of drilling, we proved up this 40 million ounce inferred and indicated with a 6.3 million ounce reserve itself, according to JORC 12. That's a very nice, sizable deposit. If you look at both Platreefs and the Waterberg project to our north, they've been doing this for a little bit longer than we have. We're catching them up quite nicely. They haven't solved their met problems. Our met problems, because they're north of us, they have a higher base metals content, which has challenges for their further smelting and refining, whereas we're sitting in a plum position, being able to take a stock standard product, as I mentioned earlier, across to the Western Limb. And one of the critical things that we've done over the course of the last 6 months is we've released a optimized pre-feasibility study. So we did the initial PFS. The initial PFS came out with a post-tax NPV of about $1 billion US. So nice, sizable project. But a lot of people were asking, well, how are you going to fund that? At the time, we were sitting with a market cap of about 60 million Australian dollars. It's interesting to fund a $450 million US dollar peak funding requirement to build the whole Tier 1 project. So what we've done in the optimized PFS is we've gone back and said, well, let's do it the typical Australian way, what I call a la Aussie, which is do it in a 2-stage process. Stage 1, Stage 2. Stage 1 is 1.2 million tons of ore per a year, producing 200,000 ounces of PGMs. Just gives you an idea of the scale. And when you add in Stage 2, it effectively takes it up to 400,000 ounces of PGMs on an annual basis. That's a big number, pretty comparable to Modikwa to the north and Two Rivers to the south from an annual production level. But what's important about it is it substantially reduced our peak funding requirement, taking it down 38% to about 279 million. Remember, that's OPEX and CAPEX, about 230, 220 on the CAPEX side and about 50, 60 on the OPEX side, because you can't just spend CAPEX, you've got to have the OPEX available to be able to get the plant and get it to steady state mining. Both Stage 1 and Stage 2 are very economic. With Stage 1 economic in its own right, so it's we could just do Stage 1 and this is going to be a real money maker. A lot of projects that I've looked at, that we've looked at, Stage 1 requires Stage 2 to be done and doesn't quite work if you don't do Stage 2. In this particular case, we can do Stage 1 and it'll be a good, viable mine in its own right. Just to highlight, based on the optimized PFS, we produced an $850 million US post-tax NPV using an 8% discount rate. That's at prices that were 15% lower than they are today. That 15% lower gives us about a $200 million uplift in our post-tax NPV. So it gives you a really nice uplift in the post-tax NPV, which is really good. We stay in the lowest cost quartile with an all-in sustaining cost on a 60-ounce basis of just over $800 an ounce, which in the PGM space is very competitive, and it's really nice to be in that particular level. And I'll explain why in a moment. This is just a bit of the topography or an aerial map looking down it. Most of our work has been on the eastern side of the project. We do have some of the drill results from some companies that have done exploration on our western boundary, southwestern boundary. And that's been interesting because it shows the continuity and continuity of the ore body itself, of the reef. It's very, very shallow. We're looking at accessing ore at about 50 meters. On the western limb, most of the companies are operating at between 1.5 to 2 kilometers depth, where the ambient rock temperatures are sitting at about 65 degrees centigrade. So to highlight here, we are literally touching the ore at 50 meters. So the idea is in stage one, the stage one south decline would access ore at 50 meters, 50 to 60 meters. A lot of very specific detailed work being going into that in terms of planning where we'll put the box cut and where the decline will go in, et cetera, et cetera. And so this two-stage approach allows us to get to ore early and generate cash early, and I'll get into that in a moment. In a two-stage project, our consultants have done some work for us on the basis of how could you fund the entire second phase or second stage out of cash flows. You can see stage one gets us going to about 100,000 tons of ore a month, and then when you add in stage two, about 4 years later, you are basically funding that entire stage two development out of cash flows, and you're generating about 200,000 tons of ore a month, and on an annual basis, that takes it up to about 400,000 ounces of PGMs being produced. What's interesting about this is that we could quite easily do a refin up front because the project has become so more fundable as we've de-risked it over the last couple of years. And we could probably do the blue a lot earlier through a refin, depending on how we structure the funding for the south decline. And just remember, these tail-offs are purely artificial because they're done on the basis of what we know so far, but there's still extensive further brownfields drilling that we'll do to prove up the remainder of the tenements that we have at the Southern Palladium Bengwenyama project. This just gives you an idea of grades. So a number of our global competitors are sitting with grades at about 2 grams per ton on a 3E or 4E basis. We're sitting at, once we've done stage one and stage two, 6.5 grams per ton mill feed grades. The in situ stage one mining area will be giving us grades of just under 10 grams per ton on a 6E basis, which is quite significant. Quite a nice, interesting split from a production profile point of view. When we get to steady state mining in both stage one and stage two, we'll be producing about 400,000 ounces of PGMs. That's 150,000 ounces of platinum, 150,000 ounces of palladium, 50,000 ounces of rhodium. We also produce a very nice chrome byproduct, about 350,000 tons of high-grade chrome on an annual basis, which gives us some very nice streaming opportunities and something we're looking at right at the moment. And that's 43% chrome content ore, which is spiraled out of the plant before it gets into the typical MF2 plant. And that high-grade chrome is very much in demand at a global level, currently trading at about $300 a ton. That would give us about 12 to 14% of our revenue stream just from the chrome production profile. Again, the tail-off in our production profile here is pretty artificial because this is what we know so far over a 30-year mine life. This is a project which is likely to go a lot longer. So let me just jump into the two stages. Stage one, stage two, cash flows. Just demonstrates how incredibly cash generative the project is. Once we've done stage one and stage two, and we've got through that initial peak funding requirement, we will basically be producing about $220 million post-tax cash flow on an annual basis. Really, really cash generative. Our revenue split is split quite nicely between rhodium as the biggest revenue spinner at about just under 30%. We've got platinum at about 26%. We've got palladium at about 24%. And then, as I mentioned, the chrome is the next largest, followed by a bit of gold, bit of copper, bit of zinc along the way, and a couple of the other more minor platinum group metals. Again, the point to make is that once you've done stage one, doing stage two, we can expedite that particular process, and that's a number of the options that we are exploring at the moment. We have just started, been doing it for about a month now. Further work at the DFS level. We have actually been working on our DFS since the beginning of the year. Here's some detailed space where you can see how we are just really proving up around the box cut area. We're not doing some specific infill drilling at the moment. We've got more than enough reserve and inferred and indicated. And that infill drilling will improve some of the confidence that we have in some parts of the area where we're putting the box cut in and the early decline development process that we're looking at. I'll get into the timelines in a moment, but just to highlight the level of detail that we're going to, already we've got, this is basically showing a photograph of the area, shows all the box cut area where we're going to put in the primary decline. It illustrates where our settling plant will go in, where we'll be putting additional dump material to make sure that we block it off from community and roads, where our mine and general stores and material and processing facilities will start going, et cetera, et cetera. As I mentioned earlier, we access the ore at 50 meters, so it's a very shallow deposit, and all our detailed work is taking place at the moment. And as you can see from the photograph, we don't have a huge number of community dwellings or community structures or roads or others that we have to move out the way. It's pretty, we've worked with the community very effectively with our partners, the community, the Bengwenyama community, to make sure that these areas remain open for us to develop as we go forward. So here's a pathway to development, and then I'll cut to the chase on what I think the takeaways are from this presentation, but we're right in the zone of getting our mining right. We've just recently had our environmental authorization granted by government. We went through the statutory 20-day period of making it available to registered, affected, and interested parties, and we had no objections. Why would the community object to their own project? Is an interesting question I was asked the other day. So we're in the zone now to get our mining right. That mining right is a long process in South Africa. We applied for that mining right in September 2023. It does take a bit of time for the bureaucracy to work. We've been working very closely with government. We've met all the conditions that are required under Section 23 of the Act to get granted a mining right, and we're now just waiting for that to happen. So any moment now, but I can't put my finger on exactly when it's going to happen. It's not if, it's when the mining right will be granted. Our DFS level work will be completed by the first quarter 2026, so it's very, very close. The DFS and the BFS, in our view, are pretty much overlapped, so we'll do a lot of the BFS work in the first quarter of next year, and at the end of this year, we've got fantastic help from Blackbird, Nick Martin and his team, who've been advising us on the debt advisory level. They've been fantastic at helping us engaging with the banks, et cetera, from a funding perspective. So just looking at the DFS, BFS level work, that'll all conclude if all goes according to plan, and so far we've promised, everything that we promised has been delivered before time and below budget by the first quarter of 2026. And then obviously we'll start some next phases in the project. We have the drilling that's taking place, a bit of geotech and network drilling that's taking place, and that's just to make sure that we've got everything absolutely right for the positioning of the tailing storage facilities, the box cut, et cetera, et cetera. So why invest in Southern Palladium? Well, let me just start by saying those precious metals that we are going to be mining at Southern Palladium are fantastic from a global economics perspective and from a world perspective. We've got world-class mineralization, high-grade, low-cost, close to surface, cheap to access, and we've got readily available infrastructure and mine services and skills in the area. So all of those are available. That's why I call it prime PGM mining real estate. Our optimized PFS gives us a very, very good project from a tier 1 perspective, low all-inclusive sustaining cost, much lower peak funding requirement at 279 million. We could reduce that even further. We are engaging with a number of third-party processors, so not smelters and refiners, third-party processors in the area, to potentially do third-party processing of our ore that we mine. That could potentially halve our peak funding requirement again, so not being 279, being 140, which is an interesting 140 million US, which again is even more fundable. So, we're exploring all these different options, and there's some interesting options that are, being exposed to us as we go forward. It's got a low capital intensity, very low all-in sustaining cost. It's a project which has very, very attractive byproducts in the chrome side, which is readily streamable. And as mentioned already, we've got a post-tax NPV at 850, but that was done on the basis of our PFS pricing deck, which is 15% lower than what current prices are doing. We've got a very supportive community. They've been in the area for 150 years. They've got both a community structure, the Bengwenyama Yamaswazi Traditional Council, which through the Traditional Council own Neuronox Investments, which is the special purpose vehicle that they have, which owns the 30% of the underlying mining right with us. So we meet all our empowerment requirements, although we don't consider them to be our empowerment partners, we consider them to be our real partners. We don't see any impediments to the granting of the mining rights, so all that is a work in progress. And so from our view, we think that this is the best, cheapest entry, high-grade, low-cost PGM prospect globally. And you can look at it, and compare us to all the other players. They've got their interesting propositions, but from our particular perspective, right bang in prime PGM mining real estate, we've got the processing options and the smelting and refining options, so we've got the met sorted. We've got a number of re-rating catalysts that are already starting to take place from a company level perspective, and that's been nicely reflected through the support of our shareholders. We raised $8 million in June from Cornerstone shareholders. That $8 million was done at par, no discounts, no options, to see us through the DFS level work. So that was a fantastic exercise to demonstrate that our cornerstones think that they'll be doing all the right stuff. And as one of our biggest shareholders said to me the other day, he said, this is the once-in-a-lifetime opportunity, and you guys just need to make sure that you continue pushing it up the value curve. And that's exactly what we've been doing. So, ladies and gentlemen, really appreciate your attention, and looking forward to seeing you on the share register soon.
Good job. Yeah, stick around. Linden, would you like to come up, and we have plenty of time for some questions here. Well, I hope you soaked up all those numbers. You guys heard, showered us with numbers, but great profiles, two great operations, and long life ahead. I mean, because the Bushveld that's a layered ultra-basic intrusive, is it? So it's just a massive igneous system. It's like the equivalent of the Witwatersrand in platinum, isn't it? It just seems to go on forever and ever. Incredible deposit. And of course, in the Cobar Basin, those ribbons of base metal just, how deep did the CSA go down?
Yeah, they're down at 2 kilometres.
A bit over, aren't they? 2.3 or something like that. They just seem to keep, throughout the basin, they just seem to keep going down in those big vertical ribbons of metal. If we've got a question, there's Keith will have a few over there. Just wave your hands. I've got the light in my eyes.
All right, just my usual 3 of each person.
3 of each, doubling down here.
Yeah. Okay, so first up for Roger. $8 million doesn't sound like enough cash. Are you sure you got enough? That's the first question. Second one is, why is it taking so long to get into production? Like on one of those slides, it looks like 3 to 4 years, and you're only 50 metres down. And lastly, a really hypothetical question. Assuming you have a typical PGE mine with a 40-year life, do you see yourself one day having your own smelter and maybe even refinery?
Okay, we'll do those 3 first, yeah.
Okay. Keith, thanks for those. So in reverse order, to build a conventional smelter and refinery is probably $1 billion US or thereabouts. Not exactly what would be defined as the best deployment of shareholder capital at the moment. However, it very much depends on the genesis of the company and what it looks like in 5, 10, 20 years' time. When you're producing 400,000 ounces of PGMs on an annual basis, just to put it in comparison for everyone here, 150,000 ounces of platinum alone is about 40% of Zimbabwe's total platinum production, which is the second largest platinum producer in the world. So just to put it in scale, it's a big scale project. So would we look at that short term? Definitely not. Longer term could become options depending on where the project is at that stage. In terms of taking long to develop the project, no, look, this project has been on the board since 2006, but the exploration was never really done properly. So we were able to get hold of the tenement in a deal with the community in 2020. It was negotiated over COVID, over Teams. Mike Sturzaker and Rob Thompson, two of the non-executive directors that are here, negotiated it over COVID. And it was listed in June 2022. So in 3 years, we've proved up a 40 million ounce resource with 6 million ounce reserve, of which 2.3 million ounces is actually measured. And so I think we've done a pretty good job in getting it to a stage of a project which is now getting pretty close to implementation. At the moment, we're really focused on the detailed design work, which you have to do at a DFS level. So you're not really looking at the feasibility now, you're looking more at the how you actually design the projects. We know it's feasible through the optimized pre-feasibility work that's taken place. So, my take on it is pretty much we've got, once we get the regulatory approvals, the mining right is the next big step. Once we've got that through, a lot of options open up for us. And so project development, actual project development could be starting as early as next year. So that's a bit on that. And what was your first question again?
First question is $8 million enough? Because it doesn't sound like much.
We already had some money in the bank, so we effectively had $10.5 million, and that'll take us through DFS. So we're pretty comfortable with what we have at the moment. Thanks.
Thanks.
So just as a rule of, we'll do those next three. Hang on. Just as a rule of thumb, platinum versus gold, how do they run? Just as a general factor.
So normally you would look at a 2-to-1 component. So if you had a 400,000 ounce gold deposit, you'd be looking at an 800,000 ounce platinum deposit, a 2-to-1. On the pricing side, platinum's trading at about $1,680 today. The gold's sitting at $3,800. US. And normally they are, if you look back in history, normally whenever there was a convergence, platinum would either quickly catch up or go down. But I always like to use the Julian, if you don't mind, always like to use the analogy, is it your gold card or your platinum card, which is the most important one?
They're both made out of plastic. Come on, mate.
Do you want to have a break, or do you want me to give it a go?
I knew that. Yeah, Keith, you got another three questions, Pap?
Polymetals, 3 questions.
Oh, here we go. Lyndon, not to be disappointed.
You've got a payback of like 14 months, and yet you seem to be generating a lot of...
microphone, mate.
Sorry. You've got a payback of 14 months, yet you seem to be generating a lot of cash. Is it still 14 months? And if so, what kind of price is it based on? That's the first question. Secondly, how much you're going to spend a year on exploration? And lastly, if you're making so much money, when are you going to start paying dividends? Oh.
3 good questions. Payback will be shorter. If you run spot in the model today, it gives you an NPV of around $660 million. We use 28 US for silver, 2,800 on zinc. Both prices at spot today are well above that. What was the second question? Sorry.
Keith can't remember.
How much you're going to spend on exploration?
So at the moment, the board's approved $7.5 million a year. We're currently, and have been since January this year, spending about $400,000 to $500,000 a month. That'll obviously increase as we reach free cash flow. But that's the kind of number with our team and the resources we have, we believe that we can spend efficiently and effectively. In terms of dividends, between myself and my family, we own 35% of the business. My father, the chairman, would like a lot of dividends, but we need to be sensible about how we implement our capital management strategy. I've no doubt that we will be spending a portion as dividends, but there's also other levers that we can use if we're going to build a long-term sustainable business.
And I have to say, in my experience, if the chairman owns a lot of stock, there's a pretty good, you know what's going to happen with dividends. It's going to be sucking as much dividends as I possibly can, just from experience, anyway. We got any more around the room? Any questions before we thank these guys? I've got one. about South Africa. So generally, I mean, I get that this is an established mining district, and like the Wits, it's a it's going to have its own sphere of socio-economic activity, if you like. But what are the bigger risks political risks in South Africa? You know, we're not short of bad stories coming out about the health of the nation. Missing in your presentation, I think you could probably just touch on that a little bit to say, I mean, it's always different when you're on the ground. I know that. I've been to a lot of places that I shouldn't have gone to and walked around. It's actually, things are pretty good. Really appreciate your comment about some candid comment about the things that concern you in the politics, in the unrest and and again, I think it's probably pretty scattered, but bearing in mind that a lot of investors also watching the same TV screens over here that we do, it'd be nice to get a little bit, you're a South African, you know the country, get a little bit more depth on South Africa. I think that's probably a question that I think what a lot of people have got on the tip of their tongue.
Well, Julian, thanks. Being also of a bit of Australian ancestry, my great-grandfather was born in Beechworth in the first gold rush back in the 1870s, I think it was.
That's okay.
I do have a bit of an Australian link too.
Yeah, I thought I could hear that.
So yeah, I think it's a really important question. I think South Africa went through a very challenging period up until COVID. COVID was the first time where government and business realized that working together could actually help sort out a number of the country's challenges. I just remember a few years ago we had quite significant declines in electricity production, in the freight logistics system was under strain, crime and security were raised as issues, etc. And business and government in each of those particular areas, I actually played a leadership role in all three of them, working with government, set up structures that were designed to help unlock private sector investment in energy, in rail infrastructure, etc., etc. And I think those processes are very much underway, and there was a task team that was also set up to deal with crime and security, which was chaired by Neil Fronman from Sibanye-Stillwater, who stepped down yesterday from Sibanye. So I think just to put it in context, last couple of years, no load shedding has taken place from a country level perspective. The mining sector alone has got more than $10 billion worth of renewable energy projects that they are going to be investing in over the next 5 years. So the power is resolving itself. On the logistics side, same thing, 13 different private sector service providers have been identified through an open process to bring them onto the rail networks to come and help rail services, which is pretty much the Australian model at the same time. And on the crime and security side, there's also some progress being made in a number of different areas, digitizing the court services systems and things like that. At a political level, the country's been through a lot of challenges up until 2018. Erstwhile President Zuma was removed from government. It was taken over by Cyril Ramaphosa and the ANC. Their share of the vote went below 50% last year. A government of national unity was set up called a GNU. There is such a thing as a GNU wildebeest, in case any of you are the game watchers who've been to the Kruger Park. But you've got all the major political parties involved in the government. There is contestation that takes place, but generally speaking, we've seen quite sensible decision-making coming out, particularly on focusing on getting the basics right. And so from my perspective, we are seeing the country has turned a corner. On the mining space, we hope to be part of that grouping of re-establishing South Africa as, again, a mining investment destination. And with a project, tier one, low-cost, high-grade project like this, it just makes so much sense to carry on. And then just to make one last comment, I mean, South Africans are all over the world. There's a huge intellectual diaspora, but not only all around the world, they also, in the area that we're living in, most of the community members actually work in the surrounding mines. When they come back and work for us in the community, there's nothing stronger than having a community that are involved in their own project. And when they're involved in their own project, they will defend that project and make sure that we don't have any challenges. So we're confident that things are pointing in the right direction, and that over time, as government fixes some of the things, they are due to release a new cadastral system before the end of the year. That's another big step which will help create greater transparency in the mining licensing system. But I'm across in South Africa next week at the Johannesburg Indaba speaking, but I'll have a chance to have a chat with the Minister and a couple of the other senior people in the department. And it's important to keep progress happening, which is what it's about.
Yeah, wow. Yeah. Well, I'm really glad I asked the question because it's maybe something you should lead off with a little bit more for two reasons. Firstly, that the country is rounding a bend on. I mean, I've just learned a huge amount just in what you addressed us with there. But so the country is rounding a bend, but also just to showcase the fact that you've had leadership in that process. I think that's incredible. Good on you. I mean, somebody's got to stand up, and you're from there, so you've got the authority to step into the political realm and do that work. So, well done on that. That's a really big point. It's a really great, as far as learning your company, and it really gives a lot of confidence to know that. So, glad I asked that one. Okay, if there's no further ado, we do have some gifts for you, gentlemen. Here comes the bearer of the gift. Well done. Thank you, James. So, you probably know this, but if you don't, I'd like to remind you that this is the Eureka flag. It is made by, it is our own replica of from the original design. It's made in super long life material, which means that you can fly it at Cobar. And it is the miners' flag. It's not the CFMEU's flag. Don't have a CFMEU anymore. You still see a few old tatty ones hanging off the cranes, but it was miners that died under this flag, and it got a bit hijacked by the CFMEU, and sadly I think it got cross-referenced with the rebel flag of the United States. So you do see them around a little bit, used as a sort of a bit of a redneck, up yours type thing, use that in certain communities, and Ballarat rings a bell. It is our flag. We give it away as the miners' flag, and the miners who died under this were 13 of the who didn't were tried for treason and released by the jury immediately. Went on to become, 4 of them joined Parliament and contributed to the writing of our Constitution. So it is we just like to recognise it as the miners' flag, the miners and the people's flag. So you have that as our gifts, and if you'd both all like to join with me in thanking our speakers. Just before we do that, hang on, just before we do that, I'm going to ask Paul Fillon here from IMARC to jump up afterwards before you'll disappear, but we'll do this now. You can thank them. So thanks very much, Paul. Paul, would you? This is the big exhibition honcho who flies the world. He pops up in all sorts of frontiers, and in 2 weeks' time. G'day, Paul.
Thanks, Julian.
I just thought you'd give us a bit of a hot shot on what's coming up. Is it bigger than ever, or?
It is. It's going to be nearly 20%. We were talking before. It's going to be nearly 20% bigger than last year. Over 100 explorers will be doing presentations similar to those, all with great stories to go with them. 10,500 attendees from across the world, over 120 countries. So far, 53 mining government delegations from around the world as well. Wow. So far.
Fantastic.
Including South Africa this year too. Palladium will be happy to hear.
Yeah, great. All right, well, good luck with that, and thank you for your sponsorship of the Sydney Mining Club.
Our pleasure.
So
Thanks,
we don't have anything pinned down for next month yet. I was just in touch with Will, and he's still shuffling a couple. We'll announce those in the next couple of days. So, but thanks, Paul. Good luck, and see you next month. Thanks,
Julian.